Hey everybody, Steve here. Thank you so much for listening in. We're doing our daily update a little bit later than normal today. First of all, super busy this morning with everything that's going on now at the Credit Suisse bank is waffling a little bit, so adding to the continuous concerns for the week of the banks. So today we're going to talk about three things. First of all, and secondly, I'm not on spring break. I'm actually at the hospital right now. Mom's having a procedure done right now, so that's why Dad and I are here and filming off location. So the three things we're going to talk about today: the flight to safety overall with investing. We have not been involved yet as Ankerstar Wealth or any of the clients, any of the stuff that's gone on. However, there's some contagion behind the scenes. Of course, there always is. So we're going to talk to that investing philosophy and why that's keeping your money safe right now. Second thing we're going to talk about is, we had the Russian aircraft and the drone incident, U.S. drone down in the Black Sea. So I'll pull up and, that was my business for the first 20 years of my professional life. So we'll talk a little bit about that and the implications. And the last one, we'll talk about some financial books to read out there. I get asked all the time from folks who either want to get smarter on their own, or they want to offer something up for their kids, to say, hey, get involved in this stuff at an early age. You have, 40, 50, 60 years of investing runway in front of you. So what are the best things to get educated with early on? So with that, this is a financial education presentation. So you have to do your own due diligence for acting upon anything you hear in the show. Full disclaimer information is available at ankerstarwealth.com. So let's get started, and let's start with the media because this is kind of eye-opening as far as what people watch this stuff and read or consume TV stuff all day long, and you can't trust what you read. I mean, you do have to honestly think about what you're seeing. So there's four people here, or three people in a company, three people, and then the Silicon Valley Bank that are all getting covers on Forbes magazine. All three have been completely inept, if you will, for running a financial institution. Or Adam Newman there for WeWork, which has a great special on one of the shows. If you want to watch it, it's a 6 or 8 episodes. It's really good. But all these people obviously are go from the cover one day to complete buffoons or in jail. We'll wait and see the next, right? So you can't just trust because you see something in the media or you hear it on Fox News or CNN. You can't trust. They're going for ratings and eyeballs and everything else. But a lot of times it's sensationalized. So find a name that you know and trust that will call everything out as honestly as they can see it, and go from there. So that's the best you can do with your money. So again, bottom right, that Silicon Valley Bank, ranked in the fifth straight year being ranked at the top, America's best banks. Give me a break, right? Super high risk. They got levered, up. They got caught up in the mark-to-market thing, which some of you are questioning that. So we'll talk about that in a second, what that really means. But just realize that you cannot trust what you see in the media just because it's on your favorite station. So let's talk about where we are with the markets today. Again, a little bit late in the day. We got about an hour to the close. We got in the green on the NASDAQ for a while, so had the heavy sales off this morning. It's come back significantly since then. How did the Silicon Valley Bank go sideways? Well, when the Fed raised rates last year, they said they were going to raise rates basically until something broke, and then they were going to stop. And you remember Jackson Hole's speech, Chairman Powell said, expect more pain ahead, and that's kind of where we are. So it all leads into what do you think the Fed will do next week, but we'll get to there in a second. So the issue has been with, parking cash at banks, and can you trust them? Do you need to move your money name in front of the bank? If it's a name you know and trust, it's been around for years, and you're going to be fine. That's where we not only, our company has cash across the, we have cash on hand. We have a rock solid, fortress level balance sheet, and we have it spread out amongst 5 different financial institutions, 3 of which are brokerages. So, spread your money out and go with the best of breed names that are out there, and you won't have any of these concerns. Okay, and up to 250,000 per bank. So have that in mind. If you have above that, I do want to show you something real quick. Say you sell a company, or you have a big equity event, or you have an inheritance, and all of a sudden here comes a bunch of money. Obviously, if you stick that into one bank, you're at risk. If you want to spread it around, say if you got $2 million, that's going to be, $2 million, and you have to spread around 8 banks. So I've highlighted kind of a key point here. So Cantor Fitzgerald, who is a huge name out there, so you can put money with them. They have a Cantor Cash program, which you're only seeing the highlights of, and they have a webinar tomorrow if you're interested. But basically, they take your money. If you hand over $250,000, it goes into their Cantor account, and then they, behind the scenes, have a computer program that does this, spreads it out amongst, is it on here, 4,000 banks, or spreads it out automatically, right? So you're at slower levels of all these banks, as if there's any issue at all. They can detect that and then move it around. It does take 100,000 is the minimum. You can go up to 50 million for a joint account if you happen to have 50 million laying around and want to put it in the bank, that sort of thing. But you can see here, and it's very cheap to do. It's 10 basis points for my team helping you out to set all this up. So it's very cheap, and right now it's paying 4.11 percent with your Cantor Cash, and there you can leave it there for as long as you want, or if it's a temporary thing, like here comes the check from the equity event, or here comes inheritance, it's like, put it away here, it's safe, and then over time you can look at how you want to allocate your capital, buy properties or pay off your house or go into private equity or whatever it is you want to do. You can allocate away from this over time, and then once you get it down below that 250K, you can take it out of the Cantor Cash program and just put it in your local bank and then go from there. So I did want to share that with you. If you have any questions about that, reach out to me and I will get you set up. You can't go direct. You do have to go through a financial institution like myself, or if you're using somebody else, but somebody else has to get you access to this. Okay, here's where we are with the day. The market, yesterday was a big up day. Today was a big down day. Yesterday was up because of the situation the Fed is in. The Fed is, you got Jeremy Siegel there talking, and I know what camp he falls in. That's why the NASDAQ just turned into green. So you've got because even though I can't hear what he's saying, I know what he's saying, right? Because I follow him. So you have the Fed has their next Fed meeting, which is next Wednesday. They have to make a decision. Before the bank collapses started last week, it was, are they going to raise 50 basis points or 25 basis points? And Powell was kind of what the word he was using was leaning towards. Let's still continue to do everything necessary to take down inflation. That would mean 50 basis points. Well, now that the banks have started to collapse, and now it's, most people, you look at there's odds boards on this, most people think it's going to be 25 basis points and then maybe pause, or there's not going to be one at all. Here's my take on it. So that's why you're listening today is, if you're on the Fed right now, if I was on the Federal Reserve as one of the chiefs, again, it's a handful of people that do this, and everybody gets to vote for or dissent against the final decision, I would be a huge dissenter here. I think you're balancing the need to bring down inflation, which they've already done quite a bit, and these things take time, versus the stability of the financial system. So I think you would be clearly on the wrong side of history if you are voting to continue to raise rates at this time. If you continue to raise rates and anything happens, you will literally hit the history books and be studied by MBAs and economists for the next 100 years, as you were either the idiot or part of the team of idiots that continue to raise in the face of financial stability challenges to the banking system. So why, right? So let's accept, in my opinion, it's worth the risk to accept that inflation is going to be around longer, higher for longer. If it is, it is. Versus the continued contagion that we might see. It's only caught a few banks right now, but there's probably some others that are having board meetings right now going, exactly how strong are we and how much of this can we take? And again, if you make the problem worse, you're going to have a few more people thrown in. Overall, I think that's what's going to happen. So yesterday was, the Fed's probably not going to raise rates because they'd be stupid to do so. So the market goes higher based off of that. Because if that's the case, we're starting the beginning of the next bull run. Historically, when the Fed rate stops, you don't fight the Fed. As soon as they stop, then off go the equities. So that's what I expect to see. Today was, oh, by the way, there's another bank, Credit Suisse, that's having issues. So therefore, the market got hit on that. But as they price it in, I think you'll see that equities are going to remain strong through here. So when you look personally at your own banking situation or stuff you have if you have money in a brokerage account over 250,000, which most of you do, to be honest, your Charles Schwab or TD Ameritrade, if you're some of the few that are still there, which is actually Charles Schwab now because they merged years ago, and your account will actually have a Schwab name on it here on Labor Day, is that you're automatically insured by the brokerage. The brokerage intentionally pays extra to the FDIC to insure those accounts. Banks don't do that. Now, the legislation that's likely to come out of this is, and I think it's a good thing, to be honest, is it should be the bank's problem, not your problem. If you want to put $5 million in your own bank, the bank should be so happy that the neighborhood bank is getting $5 million in deposits that they should want to pay the extra amount for FDIC coverage all the way up to $5 million. I don't know what it costs. I haven't gotten into the details, nor do I care to, but I know that that bank is going to certainly pay a little bit extra to have that deposit on hand, because they can turn around and then loan out a certain percentage of that deposit. Again, they have to keep certain capital minimums around to be able to make money. So it's very beneficial for them. So I do think that's the long-term legislation. But in the short term, your money's safe if you have it with the bank that people know of. Right. So, and then secondly, we're at a historic moment because the Treasury and the Fed got together on Sunday night and said, hey, we're going to backstop and basically artificially do that, not with your money, but artificially do that by increasing the premiums to the FDIC so that pot of money is there to backstop depositors so they can get their money out. Anybody who went Monday morning was able to get their money out. We have not really had a run on the banks. Now, some banks, yes, but not really overall. A nationwide run on the banks, which would cause this huge issue. So overall, we're dealing with this very well. I think the government response has been on point. I even think what Biden said the other day, I'm not a huge fan, but I think what he said was spot on, is your money safe in the United States if you deposit it into a bank. That's echoing what was done Sunday night. So we'll see what legislation comes out of this. All the finger pointing, this is Trump's fault, this is the Democrats' fault. All that stuff is kind of nonsense compared to what the actual thing is that your money is safe. That's very important. And you can move forward with your life and investing journey, knowing that your money is safe. And yeah, there'll probably be some regulation to come out of it. Okay, that's all I really want to talk about now. The market is probably going to be pretty choppy going into next week, but we'll see. If the Fed is smart enough to pause, hey, then, the equity markets can go higher. Last thing I was going to say, I brought this up I think it was either October or November, listening to Joe Zeidel from Blackstone, and he said the worst case scenario that can happen out there, and this could cause me to go conservative with my own money. I put a lot of it into private equity with Blackstone. Is the worst thing that can happen is we raise the Fed rates significantly, cause a recession, and inflation doesn't blink. Kind of where we are. Inflation hasn't blinked much. Now, it does take some time. But realize, he goes, if you do that, you'll want to be on the side of professional money management and with big private equity firms that have the balance sheet to be able to ride this through. And 2022, where was the best investment out there? It was in private equity functions. So they kind of called it. And again, they're talking their own business. I get that, but they kind of called it. And so far, that's been true. So this inflation thing may not be beatable just by raising rates. It may take some time. So that's where I'm at on. I just don't think we really need to raise more rates because we're going to cause more problems than we're going to solve. Right. So let's not do that. Okay. Moving on to second topic. Russian jet collides down with downs a U.S. drone. Honestly, if we didn't have banks failing, this is all we'd be talking about. Are we on the brink of World War III? No, but this is a far more significant event, in my personal opinion, at the strategic level than anything going on with Russia and Ukraine for the past year plus. Right, this is a direct U.S.-Russia confrontation. It appears intentional. This article says, and Score Checker's the 4-star that was talking in this article down here. Air Force General James Hecker used to be my boss, millions of years ago. It seems back in 2008 up in Alaska when we were out intercepting the Bears, Tu-95 Bear bombers. And honestly, the biggest thing going out the door there is make sure you don't unintentionally cause a war. Right. So go do the intercepts. Everybody's safe on both sides. Just don't do anything stupid that would cause a war. Well, now here you have Su-27s that allegedly dumped fuel on this drone and flew in front of it in a reckless, environmentally unsound, unprofessional manner. What does that mean? I don't know. I would think a supersonic run on an MQ-9 might take it out of the sky. If that was my mission, that's probably what I would use if I'm not supposed to use weapons. However, it appears they ran into it and knocked it down. Whether that was intentional or not, I get it. If you're clipping along supersonic, 600-700 miles an hour, and you're flying against something going 90, things can sneak up on you. So maybe they unintentionally clipped this thing and put it in the ocean. I don't know. More to follow on that. They didn't put it in the ocean; they put it in the Black Sea. Sorry, but big deal at a strategic level. Every war out there has a trigger event that is the event itself is meaningless. However, the impact is huge. So, will this lead to a change in policy with Russia? I don't think so, especially not with the current administration. I think a different administration would handle this very differently. Instead of apologizing for putting environmental stuff into the Black Sea, would be more along the lines of that shall not happen again. Any further uses of force out of Russia will lead to a direct conflict. So all of those I think are on the table, but certainly when you have the banks collapsing, I think that's where the focus is right now. So we shall see more will come out of this, but I was very surprised. All of us know in the aviation world to not, you can talk a big game and do some fun flybys and, threatening posture and all that stuff, but actually taking something out of the air is an act of war. So got that going for us. So maybe another challenge there. We shall see. All right. Last thing, I want to talk about our financial books. Again, a lot of people talk about, how can I get smart personally, whether it's just you want to have more information as to what's going on. First of all, watch shows like this. If it's not me, it's somebody else, go out there, but try to stay out of mainstream media, because mainstream media puts on the extremists, right? You have to either be the world is ending or this is the best time to buy everything under the sun. Well, the voices of reason don't, like myself and thousands out there, don't get on TV because we're saying, we're just weighing the evidence and making, they say investing is just like war. Well, not from the loss of life, but certainly all the emotional events, and there's wins and losses on a daily basis. And certainly is staying calm and weighing all the evidence and making your best plan and going forward. You either stay with the plan or you adjust the plan. Period. You cannot get emotional about this stuff. Watching TV will take you to the extremes and get you emotional. So all 9 of these books basically kind of say, hey, zoom out, keep the big picture in mind, put the disciplined habit patterns in place, and you'll be fine financially. And that is always proven to be the case. So don't really care about who this is. You can pull up the article if you want. CNBC, Million Next Door is probably the best one out there. Again, basic savings rate, stay at it for the course of your lifetime. Automatic Millionaire, same sort of thing. Get automatic with it. Fund the 401k, fund your IRAs, fund 529s if you have kids going to college. Extra money goes into a joint account, and that can be used to buy real estate or invest in CDs, or get aggressive with stocks too. The brain makeover, how to think, get rid of the emotions and start thinking logically and math based out there. Proven ways to save money and build wealth. A lot of people think just because they make more money, it's like, if your salary is 100K and all of a sudden moves to 300K, you may think you're rich. Well, nothing's changed. If you're at 100K and you spend 100K, that's one thing. If you go to 300K and you spend 300K, you actually haven't changed anything. Nothing as far as building wealth. I mean, absolutely nothing. If anything, you've inflated your lifestyle up to the point to where now, if you try to deflate that lifestyle, you can. That's why, the young football players or professional athletes that don't do football end up going broke, right? As you guys say, or lottery winners, they go broke. They inflate their lifestyle, they run out of money, and all of a sudden they can't pay their bills, right? And where if they had never won the money or earned the money, then they wouldn't have all these problems because they would have kept their life in check. So anyhow, look to build wealth over time. That means your overall net worth should be increasing, no matter what the market's doing, no matter what you're doing professionally. It's just, be dedicated to it. No guilt on being rich. A lot of people think it's bad now, especially in the woke culture, which again took down a lot of these banks because they're supporting a lot of, spending a lot of time supporting different woke sort of things versus, focusing on the balance sheet and the strength and can we really afford to use our money to support all these things. So anyhow, build your net worth, get up to where you have $1 million. That's the first step. Then it's 2, then it's 5, right? So go out through your life, try to get more and more rich. You do not have to worry about anybody shaming you who doesn't have money, right? So don't listen to all that nonsense. Feel free to get yourself financially secure with a nice, fortress balance sheet at the family level and move on from there. Stop overthinking. This is a great, turn the TV off. Please, for the love of all that's good, turn off CNN or Fox News, unless you can take it with a grain of salt, because noise and news cycles should not be, they move the markets for sure, but they should not be moving your overall strategy. So declutter your mind, reduce stress, and stop overthinking everything. Psychology of money. Yep, you bet. Your money or your life. how to use wealth to transform your life, right? Because that's ultimately, we put on our website, is maximizing life through maximizing wealth, right? So, that's what the money's for, is for you to get the most out of life, either personally or to help support causes that you believe in, right? So anyhow, that's all I have for the books. Thank you so much for checking in today. Went a little bit long, but really, this is a historic moment. It really is, with banks, on the brink. We do have to keep an eye on that, and maybe if we're finally at the end of the Fed raising rates cycle, we can get back to actually making money in the markets, which we haven't really done in 15 months. So with that, again, thanks so much for your questions and comments. If you want to add, go through social media or to our website at ankerstarwealth.com and let us know, and we will see you tomorrow. Bye.